Hello everybody, welcome back to another weekly market forecast for F45trading.com. This week is for July 28th to August 2nd, so we are the last couple of days of July and into the new week of August, so we're right in smack dab in the middle of summer doldrums. And this week, with being the only exception, I think it's going to be a pretty action-packed week. However, I strongly recommend you do not take part in the markets this week. I'm not, at least anyway. I'm going to be doing some studying on the markets, calling out direction, but I will not be actively participating in any of it because it's just going to be a little too crazy. Bringing up old trusty Forex Factory, you can see on Monday we've got the Japanese yen monetary policy statement out. So if you're a U.S. yen trader, you definitely want to stay clear of this one until this one gets released, and then obviously resume after that. But definitely don't want to be trading, and that's starting off here relatively soon. And then we've got, starting off Tuesday, we have the Bank of Japan press conference out early Tuesday morning, followed up with some medium impact Euro news, core PCE, and personal spending minutes for the US dollar. And then we get right into CB, consumer confidence, and then Australian dollar CPI and trim mean CPI. So all in all, Monday and Tuesday, not too crazy with the exception of the Japanese yen, which is going to come out with an interest rate statement. So make sure you steer clear of that one. And then Australian dollar, some high impact news events that'll drive it up nicely. But Wednesday is when obviously all of the fireworks start. Kicks off with ADP non-farm employment change at 8:15. It starts off with some medium impact euro events that aren't really much to talk about. Canadian dollar news on Wednesday, and then we get right into late in the day FOMC Fed statements, federal fund rates, and FOMC press conference to cap off at 2:30 p.m. New York time Wednesday afternoon. So what you're probably going to end up seeing is the markets are going to be fairly quiet Monday, Tuesday. Probably like a consolidation sort of thing. I don't believe we're going to see some massive running markets or anything. And they're going to be doing that in anticipation of the news on Wednesday. And Wednesday, what you're going to see is extended trading sessions. So typically the markets will cap either the high or the low at about 12 o'clock p.m. New York time. Whereas this, you see the news running to 2 p.m. New York time. We're going to see markets hitting their high or their low shortly after that, within probably about an hour, within an hour time frame after that. So keep that in mind. But Wednesday, it's going to be volatile. The U.S. dollar has come out with interest rate statements suggesting that they're going to start lowering the interest rate. So it's going to be all over the place. And I've got a pretty good idea what they're going to do. But again, I'm not trading. I'm going to let the activity die down and get the probability a lot higher before I decide to step into the market. And then going in on to Thursday, we have pound, sterling, monetary policy statements, and Bank of England inflation reports, MPC official bank rate, etc., etc., etc. So we're the yen starting off Monday, we're the U.S. dollar starting Wednesday, and then we're the pound sterling on Thursday, and then right into Friday where we have NFP numbers coming out. So volatile week, guys. It's going to be crazy in the markets. I would highly recommend staying out if I were you. And I'm not, so you do what you want, but I'm going to be sitting on the sidelines all this week for the fireworks to take place and let all the other suckers out there lose money, and I'm going to take the highly probable trades. But I personally believe what they're going to do, they've been creeping this up here for a very long time. They've been holding off these May highs from going any higher. They haven't been going any lower. We had one deep run here, but still March being the low, the most recent low, with lows in January and last December. There's a ton of area down here that I'm looking at for them to come and return back down to. There's areas underneath these lows here, and they have been very unwilling to do that, artificially propping up the dollar. A lot of different conflicting news coming out, but I mean, ultimately, I think what we're going to end up seeing on the U.S. dollar is something very similar to this. I think we're going to see prices pop up here, and then I think we're going to see them sharply decline. I think we're going to see something like that happen. That's just my personal thought on it. We have a little area here at 98.30 to 98.40 that I think they're going to run up to, but I think that's going to be it. If now, with that being said, if we decide to start trading higher, see this little block of price right in here, from 98.40 all the way up to $99. If we start trading above that, then obviously I think we're probably going to start to try and run out these highs here. But I personally believe they're going to do a deeper tracement, and a lot deeper than this one that we just saw here. But I think they're going to hit it up here for the news that's coming out this week, and then they're going to drop it. So pretty much trapping all the long traders in, thinking it's going to be a continued bullish market, and then they're just going to run back down. Now, it may be temporary. I'm not suggesting that, it's going to continue lower for the rest of the year, and we're going to see new lows this year. For all I know, that could be the low of the year right here. I don't know. But I do believe that we're going to come back down, at least, at the very least, underneath these lows right there. And so I'm going to leave that on there. I'm going to clear up some of this other stuff on the chart here. But we have a very nice run off to a very nice bullish run up here. I think we're going to clear the highs on Wednesday, and then they're going to have a sharp decline. So moving over to Euro, we just took the lows right here. So as you can see, US dollar has not taken those highs yet. Euro USD, with the monetary news policy coming out last week, you can see that's what they did there with this candle right here. Let me zoom in one more here. This was last Thursday's candle. Very, very volatile week last week on the Euro. I'm sorry, not the last week, last day on the Euro, which was Thursday. It swept those lows, and so we've got some pretty major lows, and I think, again, we could see them run down one more time, and I'm looking for 110.20 as a low, and that, again, would correspond very nicely with a nice run above these highs here on the US dollar. But so far, we don't have any confluence here. Yes, we do have a decline in the Euro USD, and we do technically have a bull run on US dollar, but you can see the US dollar has not taken out those highs in May, whereas the Euro USD has taken out those lows. So we don't have any confluence there. We have the pound dollar, which, and so again, I think, this is what I'm looking for. I'm looking for price to run down to here. We're not too far away. I mean, that's 100 pips from where we're at now. I think it's very easy for them to do something like this, run it down, and then reject, and then we start to see it run higher. That would be very easy for them to do. And I think that's going to be very indicative to what we're going to start to see coming on this week. Pound dollar, we have the lows taken out once here a couple weeks back, and then again just this last week. I'm sorry, just last Friday with that big sell-off. Let me zoom in one more time. There we go. And let me get rid of some of this stuff here. And so you can see we're looking like we're going to keep continuing lower. On the weekly, there's a couple of levels that I'm looking at. One that's fairly close here at 12300, and then the next is these two lows right here. So we'll see how much depth they want to get on it. Euro GBP is really making that big run. I called this. I said they were going to come under, sweep under these lows here. They did that in stellar fashion and even swept underneath the next interim lows here. But so far they've failed. I was looking for them to get one more step lower under these lows here, but they didn't do it. And they rejected very strongly last Thursday, straight up Thursday, straight up Friday, and now it looks like Sunday's open into Monday's candle. Looks like we're going to keep trending higher. So I'm looking for them to run out these highs this week. And in doing so, pardon me, in doing so, they'll probably continue to drop the pound lower, and euro will again probably be weaker on the downside, especially with all that pound sterling monetary news events coming out. We're probably going to see continued weakness. On the upside, obviously, we've got some targets up here that we're looking for, but I think we're going to see probably more downward spiral on the pound dollar. US CAD, we hit perfectly into the level I was calling last week. I was calling 13200 to get hit, and look at the candle high on Friday, 131.98. So it missed it by two tiny little pips. Apologies, but when I called that, price was all the way down here at 130.60. So Hopefully you guys got long on the Canadian dollar last week for this nice price move in there. But I think, again, I think if we see that big push higher on the U.S. dollar, again, this is not correlated to what the U.S. dollar is doing again either. If that was the case, we should be just about pressing up for this high. You can see here the big sell-off in U.S. CAD. Very uncorrelated to what the U.S. dollar is doing. So until this starts getting back to making some sense, I'm going to be holding off on U.S. CAD. I'm not going to hold out hope. I think on the upside, to be honest with you, 132.35 on the upside is what I'm looking for, which would be just a run above here. Where it goes from there, I don't know. As long as we're continuing, as long as we do this on U.S. dollar and shoot up, run the stops, and then reject, it'll pull the U.S. CAD back down. If they get above that red line, I don't know. But I'm anticipating somewhat sideways momentum on the U.S. CAD market for this week at least anyway, and then we'll worry about this next week. So I'll readjust then next week once we have the FOMC interest rate decisions out. UJ consolidating, obviously, because we have an interest rate decision going into Monday. And it's tentative, so I don't even know what time it's at right now. I'll have to update you on that when I see it. But there's lots of area, above where they could run price, and there's lots below. So, again, just depending on what the U.S. dollar does, we could see a sharp spike higher. They're going to price something in here, though. I do know that. So whatever we see on Monday for U.S. yen, I doubt they'll continue to take. Like, let's say we jerk up here real quickly and then reject. Let's say maybe clearing this high. I kind of like them clearing out this high right there. I believe that could be something that they're looking for on the upside. They don't have to. They could just clear out this high here. I'm going to mark both of those levels on the charts because I think that's where they're going. And then there's also this tiny little gap right here that I've been talking about. And this may not be on everybody's, but it is on mine. There's a big gap right there. So I doubt they're going to jump up that high. Like, that would be pretty serious if they did. I mean, that's a 250 pip jump. But stranger things have happened. And I'll just divert your attention to this one candle right here back in January 3rd of 2019, which was a 400 pip drop out of the blue, out of nowhere, just for them to rally all the way back up. So could they do that? Could they jerk it up here in one false swing higher to run all the stops above the market and then reject and go lower? Absolutely. They just did it right there. So again, that's why I would definitely not be trading this in anticipation of anything crazy like that. Australian dollar, we had a great trade on Australian dollar last week. All of our members would have gotten those signals out all of last week, but basically we capitalized on this whole downward momentum into here. And my target, I had a very, very conservative target of 69.35, and price actually hit a low. I wasn't anticipating it to run this low here, but it did. It ran all the way down to 6,900 basically. So job well done if you guys got some of that for last week. We weren't doing a whole lot of trading, but that was a great one. So going forward, again, if we see continued momentum higher on the U.S. dollar, it should propel Aussie lower. But I believe that we're probably going to see some support coming in here fairly soon. I'm going to put a line right about there. I want to see what they do. I'm going to get rid of some of this stuff above because this is all in the past, not relevant anymore. And I want to see if they want to get any willingness to get down to here and then what they do there. And then we'll worry about what they do next week. So again, everything's just sort of in limbo until the interest rate decision for the U.S. dollar. Crude oil, again, waiting on, obviously, a lot of factors. One of them, I believe, the interest rates as well, too. But basically, they have been doing nothing and going straight sideways for the past, all of last week was straight sideways. And the latter part of 2 weeks ago was also straight sideways. So oil not really making any headway so far. There's some equal highs up here at 60.80 that I'm looking at. On the downside, I think we've completed the area onto the downside that I'm looking at. They revisited this one candle right there once, and so far I've not wanted to go back down to it. So we'll see. They could do one quick false move lower and then a rejection higher. I'm going to be watching oil this week to see what it wants to do. Again, I'm not trading oil. I'm not trading foreign currency or anything like that, or gold or anything, just because I want to wait for the interest rates. Plus, it's summer. I'm taking it easy. There's going to be lots of time to trade and lots of pips to make in the fall. So no sense in trying blowing your accounts on an FOMC and interest rate decision week. That's very highly improbable. Last I want to talk about is gold. You can see here I'm looking for gold. We're still in this consolidation range in here in gold. I'm very bullish on gold right now. I think we're going to reach up to 115.25 is my levels that I'm looking at. 115.20, 115.25. And I think we're going to get there because, honestly, look what the U.S. dollar is doing. It's climbing extremely fast. Look what gold's doing. It's not doing anything. It's consolidating. So in my mind, if the gold move, if the U.S. dollar move higher was going to be long-term and sustained, we should be seeing the exact opposite reaction happening in gold. Gold should be going lower and trying to take out these lows or even these lows down here. It's not doing that, is it, folks? It is still maintaining, and so U.S. dollar, again, about to take out the highs from May. I'm going to go back to gold. Gold, here were the lows in May. Where are we? Here's May. This is all of May right in here. We are nowhere near those lows. And again, U.S. dollar should do the exact opposite of gold. Right? Gold's climbing. What's the U.S. dollar doing? It's also climbing. So I'm kind of thinking that it could be a false rally in U.S. dollar and that gold could be the real telltale sign. Now, I could be wrong. If gold starts trading below these lows here, I could be wrong. Especially if it starts trading into this block of price action, I could be wrong. But right now, it doesn't look like it's going down, does it? Looks like it's being propped up. So we'll see what's going to happen this week. But on bullish gold up into 15.20, like I called, and until it breaks this level here, let me get rid of this line. Yeah. Until it breaks this level in here, I'm still going to remain bullish. So that's all I've got for you folks. Again, I'm not really offering a whole bunch in way of market analysis because it is FOMC and interest rate week. But I will try to get online as much as I can, post some charts for all of our members. I will not be offering any signals or any trade ideas or anything this week. I'm just going to be kind of commenting on the markets as I see them. So hopefully this helped you out a little bit this week. And again, take it easy. Don't go crazy. There's lots to trading to do going forward. The markets are not going anywhere. And it's definitely not going to hurt you to go enjoy summer for 1 week of the year and just relax, turn the charts off. Definitely don't trade, and certainly, if you can, do some studying. So until next week, thank you very much for watching. And if you could, just give me a like down here in the bottom right-hand corner. And let me know if you got a little bit of value out of this YouTube video. Thanks, guys. We'll catch up to you later.